Hey guys, good morning, welcome to another live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stock Sniper Trading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Recording in progress.
Hey guys, welcome everybody. Welcome to our late night SST Tokyo session. Welcome guys. It's just after 9 p.m. Eastern. We're going to go for 2 hours until 11 p.m. Eastern, and then after that we're going to get some sleep and we're going to get ready for the London market and New York tomorrow morning. So welcome everybody. I hope everybody had a great day today. Thank you everyone for joining. Appreciate all of you guys in Zoom. Thank you guys for joining. Val, thank you for joining. And everybody in YouTube, we appreciate all of you guys as well. Thank you guys for joining. Flyboy Kells, what's up? Thank you for joining, guys. We appreciate all of you guys. If you guys can hit the likes and subscribe on YouTube, we do appreciate that. Thank you guys. So today the plan, what we're going to do is, yesterday we got caught up in a gold consolidation. I can see that the markets are already consolidating. Okay, it might be choppy, but what we're going to do is our plan. We're going to go through with it tonight because we had a plan yesterday and then we got caught up with gold. So I'm going to do a top-down analysis on Dow Jones, US 30. We're going to do a top-down on gold, and we're also going to do finally a top-down analysis on Forex. We're going to do GJ, we're going to do GBP, JPY, and we'll look at those three charts side by side like how I have right now. But before we even get into the charts, we're going to go over all of our business out of the way. We're going to look at the news, talk about what happened today. So did you guys trade today? There was a lot of excitement at 8:30 in the morning. Okay, big news folders, what we were talking about last night. So it's always preparing yourself ahead of time. Tomorrow we have PPI as well, so it's good to prepare, guys, so you know. And if you're on the wrong end of that volatility, you could have a terrible day trading. So please, when there is high volume volatility news in the market, specifically CPI, PPI, GDP folders, NFPs, FOMCs, all of those folders, please make sure you guys are trading with the proper risk management, because if you're on the wrong end, one candle could go against you and destroy all of your profits for the day, for the week, for the month, and over leverage, and you might be in trouble. Okay, so remember, trade smart, guys. Welcome, Elaine. I hope you're doing well and your family as well. Thank you guys for joining. I appreciate all of you guys. Hurst, thank you for joining as well. 29 stumps, thank you guys. Iliud, thank you for joining, bro. I appreciate all of you guys. Okay, so let's have some fun tonight. Okay, we're gonna go for 2 hours. I like these sessions. They're really not as volatile and craziness over here, but we can go over a lot of things. So let's just go to Forex Factory really quick over here and just talk about well, today, right now, like what happened over here. Okay, so USD specifically at 8:30 a.m. core CPI month over month, USD red folder. Then we had another red folder, CPI month over month. So there is a difference between core and CPI. Do you guys know what the difference is between core and what is regular CPI? And then we have our regular CPI month over month, and then they also give us a reading of CPI year over year. Are you guys familiar with this? If you're trading with SST, you guys should get familiar with these red folders. They happen all the time, every single month. Different securities, different Forex pairs and things like that. So you should be getting aware of what these are. So let's just talk about, Jared, what the difference are. So if you're just clicking on this, like Forex Factory, it's a great website for free. It gives you useful information. So just looking now at core CPI, because tomorrow we're going to see some other ones. We're going to see PPI. So we want to know what it is. So I'm just going to take maybe 5 minutes out of the session just to explain this, because I believe it is important. It's good to know. A lot of traders just look at a red folder and they get ready for trading, but it's important to know what's behind this, the macroeconomics, and what does all this mean, because then maybe when you get a better understanding, then you can kind of predict where the markets will move. So let's talk about this. So for core CPI, the first one up here, month over month, we have previous, okay, so the previous month was 0.3%. And over here, forecasting. So what are they forecasting? 0.3%. So that is no change. So they're forecasting no change in core CPI month over month. Then we got our actual reading that came out, and it's 0.2% red. Okay, so let's now click on it and just read what this is right over here. So the source, it comes from the Bureau of Labor Statistics. Okay, what does it measure? It's a change in the price of goods and services purchased by consumers, excluding food and energy. Okay, so I'm going to repeat this, guys. So what is core CPI? It's a change in the price of goods and services purchased by consumers, purchased by me and you. Okay, so we are the consumers in the markets. We are the consumers in the economy. So what it is it's tracking our spending month over month, but it's core, so it excludes food and energy. Okay, so are we clear on this? It's real simple. Okay, it doesn't have to get too complicated, but what it is the change in price of goods and services purchased by consumers, excluding food and energy. Okay, we can all agree food and energy is probably our biggest spending. Me as a consumer, I spend a lot of money on food at the grocery store, okay? And food prices are skyrocketing with inflation all around the world, not just over here in Canada, all around the world. So, but this is not taking a reading, so it's excluding food. Okay, so we have to know that. That's what core CPI is. And energy. So oil and energy, that is big too. I have to heat my home right now in the winter time. It's cold. I need energy. I need oil. I need heat over here. Fuel for my vehicles. Oil and energy to get you places. It's a big part of a big budget that us as consumers spend. So core CPI is excluding this. What does it mean if the number is actual greater than forecast? So you see actual greater than forecast. Was it better than 0.3%? It actually came out red, negative. So that would be good for the US currency, and it's released monthly. Okay, so our next release we'll have the same conversation on December 12th. That will be our next CPI every single month. Notes. Food and energy prices account for about a quarter of CPI, but they tend to be very volatile and distort the underlying trend. Okay, the Federal Open Market Committee, you guys have heard of this, FOMC, usually pays more attention to core data. So do traders, you and I, okay? And why do traders care? Consumer prices account for a majority of overall inflation. So that's what we're talking about, is inflation. This kind of gives a little bit of a reading. Is inflation improving? Are they lowering it? Is it getting worse? Things like that. Okay, so that is the first one, core CPI. Now we look at the numbers. Okay, so remember what I was saying, what it is, and the numbers that actually came out. So they were forecasting no change, 0.3%. What happened over here when the actual numbers came out? 0.2% red. Okay, so what does this mean for inflation? Can we? Somebody say it to me. Okay, so is this good for inflation? Does this mean inflation is improving, or does this mean that inflation is getting worse with this core CPI result that came out? What do you guys think? Good. Yeah. Shiva Kumar. So let's just logic, common sense. Okay, this is good for inflation. It's going down. So us as consumers, we're being conservative with our money, and this is going down. Now let's look at CPI month over month. Okay, so remember the first one was core. Well, we talked about oil and energy and food. Now what is CPI month over month? Okay, so let's look at this one. So it's pretty much the same. Okay, measures change in price of goods and services purchased by consumers. But you see how it doesn't exclude food and oil and energy. That's core. Okay, so some readings are more heavily emphasized on which one they're looking at. So again, actual greater than forecast is good for the currency, US dollar. It's released monthly. Our next reading again will be December 12th. So it's pretty much the same thing that I just read. The only difference is the core. Okay, and this one actually went down as well. So previous month was 0.4%, and they were forecasting a decrease, 0.1%, and it actually came out even lower, 0.0. Okay, so that is good for inflation. They're bringing inflation down because consumer spending is going down. That's what they want to bring down inflation. So they use interest rates to increase interest rates to force us to start saving our money and not spending reckless and being more conservative with our money. So this is telling us what's going on with consumer spending. And then finally, the last one. Okay, so let's all understand this. Okay, I just want to go through this. Core CPI. Month over month, that was the one that we were talking about over here that excludes food and energy. Okay, and then the only difference between these two right here, CPI month over month and CPI year over year, is just the time frame. So this is month over month improving, and then now year over year. This is a really important one. Year over year, from last year this time. From November last year, what are we doing? Is CPI improving? So we had a previous 3.7%. They forecasted that it would go down lower, 3.3, and it actually came out better than expected, 3.2%. Okay, so now what would that do to the US dollar? Remember what we were reading here? A actual greater than forecast is good for currency. What do we think would result to the US dollar, DXY over here? Let's take a guess. Do you think this is good for the US dollar? That CPI is going down? Or do you think this is negative for the US dollar? What do we think? Anybody? And don't look at DXY. We're learning, okay? So don't just go to the DXY chart and then just look. Let's all do this so that when this happens in real time, we're prepared for it. Down. Okay, guessing bad, yeah. So let's just take a look just to make sure. So over here, let's just bring up DXY. And if you guys are not familiar with what DXY is, this is our US dollar index over here. And it is a reading of the overall US dollar. It's a basket case paired against all the other major currencies of the world. So what time did they release that CPI? 8:30 a.m. Eastern. Some of you guys are familiar, you guys traded, so there's 8:30. So what did they do when they opened it up? Okay, so let's just talk about how the candle opened. So you know when they kind of 8:30 opened and then they released those numbers. See, this candle was initially green. It opened green to fake out the market. They brought it up green. So if you got excited and you bought, you see it didn't break this resistance right over here. So like right there is our resistance, okay, at 105.623. And you see they tried to fake out the market with those numbers. It came up green, okay? And then if you bought, you got caught up there. Then they really pounded it down. So when the actual numbers came out, inflation decreasing, going down, which is not good for the US dollar because then there's more selling on the US dollar and they see that the markets are going good and maybe they're going to move. So I always ask the question, if money is leaving the US dollar, where's that liquidity going? I always ask myself this question. If money is going into US dollar, like for example, if this was a big green candle, we've got a lot of buying of the US dollar. Where's that liquidity coming from? Something has to be selling in order for investors to purchase US dollar. So same thing with selling the US dollar. There's a major institution or big player here selling the US dollar. Where is that liquidity going? So once they sell, it's got to go somewhere. So this is positive for the stock markets. So this is where we see a rally in the market. So if you were trading today, either S&P 500, if you were trading Dow Jones, if you were trading NASDAQ, if you were trading Russell, if you were trading any index related security today, I'm pretty positive that they were pretty bullish with the selling of the US dollar. And same with gold. Okay, so gold oppositely correlated. If the US dollar is going down, I'm sure that the money was moving into gold and commodities and things like that. Okay, so do we understand? I'm sorry I'm taking so much time on this, but it is important, guys. It is important. In my opinion, it is important. I like to talk about this because then we can get ready for the next CPI or tomorrow's PPI and things like that. Okay, so are we clear on that explanation as to what happened? So there was that initial little fake. So if you get caught in that little fake, then the actual numbers come out, and then they move the market accordingly. Okay, so just going through the analysis the rest of the day, like us right now, 9 p.m. So if you're doing anything with the Chinese yuan over here, you got industrial productions year over year. So anything you're doing in the Chinese exchange, you got a lot of Chinese folders right now at 9 p.m. Eastern, and then JPY at 11:30 tonight after our call. Okay, so I just want to talk about tomorrow as well, because if you guys are trading pre-London, okay, we got GBP, CPI year over year. So same thing with over here, okay? So they got core CPI. So if we're trading GBP USD and it's pre-London, 2 a.m. Eastern, if you get up for it, same thing. Now we look at GBP, red folder, CPI year over year. Their previous was 6.7%. They're forecasting 4.7. So we'll see the actual number. If it's like 4.5 or 4.3, it's going to look something similar to what happened this morning with the US dollar. That's the inflation is going down. Maybe it's bad for the pound, so you might see the pound sell off, okay, and things like that. So continuing, but this is the one specifically I want to talk about tomorrow, 8:30 a.m. So we had CPI today, and tomorrow we're going to have PPI. So do you guys know what the difference with PPI is? CPI and PPI. Remember, CPI is consumer, me and you, our spending. PPI now, if you just click on it, let's just see really quickly what it is. So again, it comes from the source of the Bureau of Labor Statistics. What does it measure? Change in the price of finished goods and services sold by producers. So excluding food and energy. Again, core, remember, is food and energy, core. Okay, excluding. Actual greater than forecast is good for our US dollar. It's released monthly again, and we're going to get a next PPI reading at December 13. Okay, notes, source changed series calculation formula. We don't need to know all that stuff. But main thing is exactly what we just talked about with CPI, but this one is all about finished goods and services sold by producers. Okay, 29 stumps, you got it. Okay, so this is about producers now. And again, same readings. Okay, so we got core PPI. So that one, anytime we see the word core, we know it's excluding food and energy. Are we clear on that? Thumbs up if we understand that, because then we can move forward. Because a lot of people get this confused, as they always ask what is core, what is, and a lot of people don't even care. They just look at the numbers. They don't even know what's going on here. I myself was one of those guys back in the day when I didn't even care what this meant. I was just looking at the numbers. But when I started to really understand, okay, now CPI is all about me and you, the consumers. What are we doing with our money? How do we affect the markets? And it makes trading a little bit more easier when you actually understand what is going on. So over here, producers excluding food and energy is core. Okay, and then the other readings, it's got to do right over here with PPI, but we've got core retail sales month over month. Okay, so again, the word retail. Core retail sales month over month. What is that? It's a change in the total value of sales at the retail level, excluding automobiles. Okay, so you can see now they're kind of trying to target exactly where money is being spent. Is it spending? What is going on in here? Automobile sales account for about 20% of retail sales. Okay, so we're going to see all of that tomorrow morning. Empire State Manufacturing Index. Okay, there's something over here. Level of diffusion index based on surveyed manufacturers in New York State. Okay, New York is a big state. Lots going on in New York. That's where Wall Street is, so we have to pay attention to that. And then we got our PPI month over month, and then retail sales month over month. So then we see the actual previous we see the forecast, and then we'll see the actual numbers over here. And it could be very volatile tomorrow at 8:30 a.m. Eastern with all of these statistics coming out. So be careful trading tomorrow morning, same time. Allocate a certain amount of risk, because you can see, like today, how volatile the market was in the first couple minutes when they released those numbers. Okay, so that's tomorrow. Okay, let's just go over quickly any earnings tomorrow pre-market. So right over here, let's go to the calendar. This is earnings whispers. I like to look at this every single day before and after I trade, just to be prepared. So tomorrow is, what is tomorrow? Wednesday. I don't even know the days anymore. Tomorrow's Wednesday. If you just click this toggle right over here, we get pre-market. So if we're trading anything, we want to know pre-market. Remember I gave you a heads up about Home Depot yesterday? Home Depot pre-market had their earnings pretty good and kind of helped the Dow move a little bit, because if you know exactly what the Dow consists of, Home Depot is one of the securities in there. Okay, tomorrow we have Target. I don't even know if this is a store anymore. Do you guys have a Target in your city? Ours closed over here. So I don't even know. Do you guys have a Target in your cities? Over here, they're getting eliminated. So I kind of look, is there a big company that I should be aware of for the security that I'm trading? I'm normally trading US 30, so I'm always looking for something that's weighted heavy in the US 30. I don't see too much. Also, this is pre-market. If you toggle right over here, it's going to give us our after hours. Okay, do we have any coming? Cisco in after hours tomorrow, and it's got the times 4:05. Sometimes you'll see something at 5 p.m., 8:15, 4:15, all over the place. So not much going on tomorrow with earnings. Okay. And then right over here, guys, so just to get this out of the way, our scheduling, okay, if you want to join SST, our schedule right over here, guys. Okay, so we switch it up. I'm doing more of these Asian sessions this week, and we're going to do some more next week. I really like this time to educate. It's quiet in my house right here, and I can get a lot of things done. So right over here, I'm coming after PK. PK just went 7:30 to 8:30. I come after. Tomorrow again, we got PK. Then I'll come after, guys. So YouTube 9 to 11 tomorrow this time again. We got our weekly webinar right over here. We'll probably do maybe a Q&A like we did last week. Wellness check, see how you guys are doing. And then we got our 7:30 to 9:30 on Thursday. Guys, we also have our pre-Londons, Londons. We got our New York Wall Streets, and then our post, and then Asians. Okay. And I put in on YouTube, there's linked at the top, pinned at the top, there's our free Telegram. If you guys want to join it, click on the pinned at the top of YouTube. There's a free Telegram. It's ours, because there's a lot of scammers out there. This one, we assure you, is us. It's myself and Dave posting in here. We like to showcase what our snipers are doing in our program, the SST Scalper Pro, the kill shot, couple trades taken, what's going on in the Zooms, and just keep you updated, guys, when we have promos and things like that, just to keep you guys informed. Okay, it's free. It's nice to join. Now, guys, let's get into the charts. Okay, so let's do the fun stuff. So we saw US dollar, and the US dollar. Okay, so what was the trend yesterday after they released that news? It was bearish. Okay, remember, if you're countering a big bearish move, there was only an opportunity right there, and then they hammer it back down. Here we consolidate again. It didn't. I don't see any green volume closing above here, or 50% of that candle in order to come up here. Again, they pushed it down. So if you start counter buying, you could get in trouble. Again, it came right back up, but no volume, kind of closed above those wicks. Then they take it down for a new lower low. Again, it pulls back up at 11:30, and they continue to push it down. Like RSI is down at the bottom. If you continue to use this indicator in trading, you're probably going to get yourself in trouble. Because did we even see a bullish rally or even a reversal? No, we didn't. Okay, nothing. So it was like dead weight, just dropping the US dollar. So right now we're trading at 104 right now. They kind of gapped it up. These are gaps in the market where the market closed right here, and then they kind of gap it up. Sometimes they do fill the gap and then continue trading. Okay, but we're not going to be doing DXY today. We will be doing Dow Jones. Okay, we did NASDAQ yesterday. Let's do a little analysis on the Dow. Okay, so I'm going to do 3 charts today. We're going to get through this, guys. I promise you. We're going to do Dow, gold, and GJ tonight. Okay. Yeah, 29 stumps. RSI is the really silly indicator. I use it for confluence, okay, for confluence, or look for divergence. But I always tell you guys, anytime it goes above 70, don't just hit the sell button like how we're taught to trade it. Or if it goes below 30, don't just hit the buy button, because it might just be a small tiny pullback, and then they keep pushing it down. Okay, so we need more and more confluence. I always look for volume to close above a certain point in order to give me that confirmation. Okay guys, so let's get started. I'm going to go with the Dow. Okay, so US 30, this is one of my favorite securities that I like to trade. It moves, for me, it moves really nice as a scalper. You can see some nice moves over here, nice sell, found a bottom. It rotated right back up. It came back down, nice double bottom. I remember what I do, guys. Okay, so make sure you understand. Like, you see those wicks down there. The wicks mean it came down there. They stop hunted. They took out pending orders. But always focus on the critical volume. When I trade, critical volume is the bodies. Okay, whether bodies close, open, right there. You can see right here, body above. So it came down. And then if you wait for it to close, it closed right there. It came down again. If you wait for it to close, it closed up here. It came down a third time down there. And if you wait again, it came back up. And then you could buy anywhere in here and then place your stop maybe below those wicks. And then you catch that nice run right there. Okay, so remember, wicks are very important. Okay, it tells us the range, but bodies are also very important because that's your critical volume of opening and closing on your particular time frame. Okay, so let's start off with a top-down analysis. Okay, so I'm going to go on the daily. Okay, look at what's going on here. Okay, so remember, we've been talking about this double bottom all last week. We were talking about this consolidation. Okay, so number one, we've got this double bottom where it came down, back up, there's our neckline, and then we came back down, consolidated here. One more big dip right there, Friday, October 27th. They ended the week down there, and then they gapped it up. Big bullish engulfing candle, close above. And again, you see where the volume is closing, like above this range. So to me, that was a big liquidity grab on a Friday to close out the week, and then they grabbed the money and then come back up. So it allowed for this big weekly move, big bullish move. And then as soon as we got up to this resistance right up here, which was support here, turn to resistance here, turn to resistance here, and then you see how we were just consolidating all that one last week, starting on Monday. So it was red, we went green, we went back down red, we came back up Friday with a big bullish engulfing candle, close above. So how are we moving this week? So let's identify critical zones in the market. Let's all agree that that's a pivot of support. Okay, see when the red candles came down, and they stopped right there. And then it reversed the move and came, but it didn't have enough juice to go for that higher high. So the supply was coming down and they lowered it. So number one, that's an area of support, right? So where did it pivot to? It pivoted right here. Okay, so I'm going to draw a box where it pivoted to. And I can see over here, it was support right there as well. It held. This was like gold yesterday. It came back down, went back up, came down, back up. And then finally I got stopped out. But this is very similar. It came back into the support and picked up the liquidity. When we stretch it across, this big red bar closed below, and then you see the retest come up to about 50%. If you flipped your box with the volume below, green to red, let's just flip it right there and stretch it across. Stretch it across. So you see where we stopped right there, it came back up. The buyers brought it right back up, right into that zone of supply. And then what happened? It came back down. But it was a higher low. Did it touch this green box down here? No. So the bids came back up right here and pushed it one more time up there. And then what do we have? What's the name for this? Who knows what this is? Someone give me the name while I drink my Gatorade. Come on, guys. Let's go. This is basic stuff. What is this top called? Supply. Yep. But the double top. There you go, Lee. Yeah, double top. Okay. So it came up one time, and then they pushed it back down. It came up again. And what was there? A big bearish engulfing candle, bring it right back down. Then we consolidate, and then sellers are in full control again. Okay, so that's kind of a double top. What is happening at a double top? Okay, so that was the first top right here. When the market came back down, we found the buyers. As the buyers are coming back up, the suppliers are adding offers in the market, and they're creating that big block, like when we're watching on Bookmap, when we're watching the live liquidity feed, and we can start to see the big heat coming in the market. So that's kind of like the heat coming in. And when this big buyer came right in there, there was a offset by a lot of supply up there, and then that big bearish engulfing candle came right back down. So what are we going to do with this zone? We're going to keep stretching it. Okay, let's not stop there. Remember what we say? Let's bring all of our zones into January 1st of 2024. Okay, so see what I'm doing? I'm bringing it across because I don't want ifs, ands, or buts to say, well, you guys are going to say, okay, Ron, but it already happened. You can see that right now. Obviously, I can see it, so it's easy to chart when we can see things. But what about over here? This is all black chart over here. I have no idea how it's going to trade going into next week or next month. But what we can do is we can bring this across because it's a static zone. So we always call this static. The size of the zone that I've just identified is not going to change. I'm not making this zone like this big. I'm going to keep it exactly where I believe it was held as support right there, resistance right there, resistance right there. So I'm going to keep the size of it, and what I'm doing is just bringing it across. So you can see today we traded right up to there. Yesterday, okay? The high was 34,923. And you see how we came right into that red box and then a little bit of selling pressure. And today, here's our daily candle, this little tiny doji, if you guys can see it right here. So what are we going to do today? Are we going to continue to push, fill the wick, and trade into this big red box? Okay, maybe we get rejected and it's going to pull back tonight, coming down into here. Okay, so but I'm not going to stop with this red box right here. Remember, let's bring it into, here's November, December 1st, December 5, December 15, December 21, December 28. Let's go to New Year's, January 1st, right there. See where I brought it to? Monday, January 1st, 2024. We're going to pop some bottles of champagne over here. So let's bring this all the way over there. So now I have a zone. Also the green one right here, that was our first pivot where the market stopped right there, pivoted, and then came right back up. If I bring this across, what do I do here? What color is the box right here? Very basic stuff, guys. I know it's basic. You guys are probably saying, Ron, this is too basic. Why are we doing this? But for some traders, it might be their first day learning. So I always assume it's everyone's first day here. So with the volume below, what do we do? Well, what do I do? Not what do you guys do? What do I do? Red, right? So the only thing that is variable, the only thing that moves is volume, okay? See this? Do you guys see this Gatorade cup? Gatorade G0, the best stuff. Iceberg, the blue, 0 sugars. This stuff, if I can get a sponsor by this, I love this shit. Okay, it's got volume inside, right? So what happens if I continue to pour Gatorade inside here when it reaches the top? What's going to happen to the volume? What will happen? Will it spill? If I keep pouring Gatorade inside here, what's going to happen when it reaches the top? It'll spill, right? So same thing with these zones. The only thing that moves is volume. Okay, our zones are going to stay static. The only thing that changes our zones is where the volume is. Overflow, I love it. It stumps. So like up here, so if we continue to come up green, if it's a bullish day and we close, let's say for example it's a green day and we come through here and we close above here. Okay, we close, we overfilled, okay, overfilled, the volume overfilled this zone. So what we do is, with the volume above, what I do is, the zone is the same, I just change the color, because I want it now to be an area of demand, of bids, of support in the market, where when it pulls back, okay, let's say we close green up here, the body is up here. It might get offered up here some sells, and then it will come back down. And then when it transacts in this box, this is where we want to see big buyers step in the market and make this a confirmed move where this turned from supply to demand, and then all of a sudden we're coming up here. Okay, so that's the only thing that moves is volume. Okay, so again, I'm just going to get rid of this. We're going to make this one red again. I was just explaining what the volume is up here. Okay, so let's just go back to red right here. Sorry guys, 1 second. Okay, so down here, you guys got it right. The red volume closed below, so anytime it comes in here, the buyers are coming in, but we got to make this box red to represent resistance, to represent supply, to represent sellers. And what happened? The market respected the red box and pushed down for a new low. And it came right back up. Where did it come back up to? Well, if you guys did this, you would know exactly where it's coming right into. It came right into our identified static area of supply. And again, it got rejected. What is that? It's a double top. It got rejected right here one time, and it got rejected right there 2 times, and then dropped all the way back down. Now we continue to extend it across. This was that choppy week I was telling you. We were consolidating right here. Why? Because we were at the neckline. This is where it was accumulating for the next move. And who won? Who won? See this big candle on Friday, November the 10th? Bullish engulfing. Where did it close? Did it close above our red box? Yes. So when the volume closes above, what do? Flip it green, right? Keep it simple. Common sense trading. Simple. And green, and bring it all across. We're going to bring it across to January 1st, 2024. So now we've identified if the market sells back off, maybe we're going to find buyers here. It might be a higher low. So then I look at also 50% of this big bullish candle that we traded. Now look at the retest. Okay, so you see the big bullish candle close above, high, close right there. What about when this candle, they gapped it up, they brought it down red, 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 but it picked up a wick right here. So it didn't technically come trade into the box, but we have to understand that it's not always going to be like that. They created a higher low right here. So the bids came up higher and wanted to hold up the market, and it rejected it. The buyers came in and we came back and we pushed and closed. Beautiful. So you see how they set it up for CPI today? It was set up beautiful, guys. Okay, so we have, like, if I can break this entire play down for you guys and put the pieces of the puzzle together, like right there, that was a pivot. Bring it across. You see right there? So this is where I was telling you about. This was a liquidity grab. What business did the market have coming down here? Okay, and when was it? Look when they engineer these moves. Okay, trading is engineering moves. If you understand what an engineer does, whether you're a civil engineer, an electrical engineer, you're a mechanical engineer, if you studied engineering, you will understand what trading is. So trading is engineered moves. Okay, they're engineered by market makers. They engineer their moves. Look at the date and time when they engineered this liquidity grab. This was on a Friday, ending on a Friday, October 27 down in here. And on a weekend, then there's all types of things can happen on the weekend. There could be a pandemic. There could be a war breakout. There could be natural disasters. There could be anything that happens over the weekend. Then it allows them to decide what they're going to do with the market. And here it closed down there. They gapped it up. They came up and they closed it again on the Monday. So to me, this weekend was pure liquidity. They came down, they hit all the stop losses, they got all the pending orders, they got all the money, they got all the volume. And what did they do? They closed it right above our pivot zone. Again, bring this green box across into the future. This is support 1, and this might be support 2 down here, bigger zones. I can break these down into minor support zones, but these are the big levels. So to me, this sticks out like liquidity. And then look at our pattern. Now when we're looking at the pattern, look how visual it is. We came down, one bottom. We came back up to the supply when we had it red. It got rejected. We came back down. To me, this is the double bottom right there. This is their engineered liquidity grab, but there's the actual double bottom. And look at when we came up. We came right back up to the resistance, and 1 week of consolidation, Okay, that's where the market, remember, someone is going to get squeezed out of here. Just like when we're trading the 5-minute candles or the 1 minutes, there's going to be buyers and there's going to be sellers. Someone is going to get squeezed out of here. Okay, and in this situation, again, look at the time and date, guys. Friday was a big bullish candle. They closed it above here and then gave the proper retest right there yesterday, and then perfect time for CPI. You don't think that the markets know their numbers of CPI and shit like that? Come on. They know all the numbers. They know the numbers that are going to be released. It's all a game about picking up all the liquidity and things like that. So once they got the money, they know where they're engineering the move. They engineered the move right up to our supply. Now we're going to figure out what's going to happen going forward today. Are they going to come claim that high of yesterday and break it out a little further, or is it going to catch some resistance here and we're going to pull back a little bit? Okay, so now we have to start visually analyzing where we could move in the next couple of days, specifically tomorrow. Okay, so do you guys like that type of analysis? Normally I don't do that with a top down, but I'm not going to do this with gold and GJ. I'm going to go a little faster, but I really want you guys to understand. And if I didn't tell you guys this was daily candles, if I got rid of this watermark back here, if I took off US 30 1 day, you guys would have no idea. If I told you these were 5-minute candles, you guys would have no clue. This could be 5 minutes. Okay, so the why I love price action is because it does not discriminate. It is what it is. A bullish candle is a bullish candle. A bearish candle is a bearish candle. A support is support. A red zone is resistance. It doesn't matter. You see exactly how daily candles react at these levels. So if this was a 5-minute setup, this was my 5 minutes, this is 5-minute support. It holds, I buy. And I place my stop loss down here. And then when it comes to resistance, if I see it get rejected, I sell. Put my stop loss above here and write it down. I might not, these are 1, 2, 3, 4 days of red candles, but this could be a 5-minute, a 5-minute, and a 5-minute, and a 5-minute. That might be a 20-minute trade where I'm in and out. These could be individual 1-minute candles where this is 1 minute, 2 minutes, 3 minutes. And that might be worth, when we're trading 1 minute, that might be like 20, 30, 40 pips. But on daily candles, that might be 3, 4, 500 pips, depending on what the range is. So now I get my measuring tool. Same thing I do when I'm scalping the markets. I measure my zone from top to bottom, up here, down to the bottom. Look at it. It's 1,000 pips, guys. 1,000. Okay. Even if we measure the zone from right here, from here to up to the red box. So if you want to be a swing trader, you can be the best swing trader you can be. Look at it, 800 pips. You could be done for the entire week. That's it. You're done trading on Tuesday. So if you know what you're looking for, put the pieces of the puzzle together and it will make sense. It doesn't get any more visually clear than this. That's perfect double bottom, liquidity grab. Here's our bull flag consolidation right there. When I trap, the sniper trapping gap, I make it neutral. Sometimes when I don't trade this, remember what I say, place an alert above here, place an alert down here. Someone is going to get squeezed out of the market. US 30 is not going to trade in this zone for an entire week or 2 weeks or 3 weeks. Eventually that volume is going to overfill. It's going to spill to the top or it's going to dump to the bottom. Okay, but it's just the patient and discipline get rewarded. A lot of traders are impatient. But if you understand that this game is all about patience and you take your time, and if you're speculating, like I like to speculate too, take a small trade. Take a small trade where you're feeling out the market, because we don't know if sellers are going to bring it down. They brought it down. It came down. But then look at Friday. Friday was their big move where they closed it strong. So use some feeler trades. Use some if you are just speculating until you see where volume kind of closes above and gives you a nice retest. Okay, so let's move forward. Let's finish off what we got going on our daily. Our daily candle is very, very small right now. You can see Tokyo doesn't bring in a lot of volume in the market, but let's just talk facts of what happened. Okay, so it closed right here and they gapped it up. There's a gap in the market right there. So when they gapped it up, look at what they did. They brought it down red. See the wick? It came down. And what did they do? Look at where it stopped. They filled the gap. Okay, so they brought it up momentarily and it came right back down. So what is our low of the day? Purple line. They filled the gap. So I can see right now, they filled the gap. Okay, do you guys know what gaps are in the market? So, flash. Not to interrupt, will we be entering any trades for us to take with you? I am about to take a shower and I just want to make sure. We're gonna break it down. US 30, gold, and GJ from daily, hourly, 5 minutes. If we see a trade set up, I'm going to take a trade. If not, it is what it is. You know, I always plan to trade with you guys, but sometimes analysis is important too. You know, that's why I want to take some time in these Asian sessions when the markets are slower. So what we learn right now, we can put into effect in London and New York when the markets are really where we can pip and dip and get some good pancakes out of the market. So right now, I like to use these sessions more for education. If you guys are okay with that. I know everybody just wants a buy-sell signal, but to me, education is more important. Okay, you can do this then all the time with or without me, you know, with or without SST. Okay, but if we do fall into a trade, we're gonna trade it. Okay, we do enough live trading, but we got to do some education, and also we want to give back to YouTube as well, a little bit for you guys. We appreciate all of you guys as well. Okay, so what happened? We gapped up, it came down. Okay, so support is holding where the body closed yesterday. Okay, so just going down. You know, guys, if you've been trading with me for a while, you guys know exactly what I'm looking at. Who wants to guess what I'm looking at? If there's a pullback, if sellers sell it back down, where do you think would be our first level we might test? What do you think? Okay, a lot of traders will say, like right over here where there was some support right there. And you're absolutely correct. You are. If you say right here where there was that pivot of volume where the market came down and it stopped right there. Remember, I like to locate the bodies, body. The wicks came down, but they came back up and closed. So for any other critical daily level, I use a yellow line. Okay, only purple for the high and low. I'm not a Lakers fan, but I don't know why I use purple and yellow, but that's what it is. So that's all the way down here at 34,428. Right now we're up here. So yes, you are correct. This is support. It was resistance right there, and it could be support. But it's all the way down here. We got a long way to get down there. So yeah, you guys got it. 50%. Okay, so half the candle. So number one, here's where it opened, and here's where it closed. Half of it, if I'm just eyeballing, is right around there. That's half of it, okay? And I probably smoked a large joint just right before this call. So I'm still locating half of it right there, okay? So I'm sure some of you guys can locate half of it. But what we can do is we can look to the left to give us critical data points, which is right near the halfway point. So let's do this. So if I was saying that's about 50% right there, I see a lot of bodies right there, okay? So you see what I'm looking at? That I was just looking at halfway, like right around there, but what I look at is right over here. I've got a body, 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 and then I got wicks that got rejected at that yellow line, okay? So to me, that, and look at the number, guys, okay? I swear to you, I did not place this. I just placed it at this area. And look at the number, 34,650, 34,650. It doesn't get any more psychological than that, okay? I am a psychological trader. 50% levels and whole numbers, I've made a living off of this, okay? So I'm telling you guys, the markets are attracted to whole numbers. It's easy to transact there for market makers. Someone asked me the other day, Ron, what do you mean by that? What do you mean it makes it easier to transact there? Same thing right here. See this Gatorade I have? If I'm selling it to you for $2, okay, and I put the price of $2, I'm probably going to sell more bottles because it's easy at $2. If I put a price tag on this Gatorade at $1.87, okay, then we got to deal with change. You got to have change, loose change. I got to have some change to give you back. We might not transact. Some of us might not have change. So then you see how we slow down the auction. The markets don't want to slow down. They're efficient. They want to pick up every single bit of liquidity. everything. Okay, so they like to have big orders placed at these whole psychological levels and 50%. If you use the Fibonacci tool, Fibonacci is a retracement tool, mathematics, 0 to 100, 50% being the mean, the middle, and your 61.8 is kind of your efficient zone, and then we call it the golden zone. So if you run mathematics and things like that, you're going to start to become a better trader to know these levels. Okay, so right there. And what do I do there? I'm going to place a green box down there, okay, at that yellow line, because in case there's a pullback tomorrow or the rest of the week, so I'm going to go a little bit above and a little bit below, just to give myself, so it might not come exactly to that yellow line, but a little bit above and a little bit below. You know exactly when you use your Fibonacci tool, if the middle 50% is right there, you might have the 618 just right below it, and then you got the 38.2 right above it. So it's kind of like I'm trying to do my own golden zone. I figured where the halfway point is, so I want to give it a little bit above, a little bit below, and make it green. Why am I making it green? Because the volume is up here. It's above us. So if it comes back down, we want to see if the big institutional buyer of this candle, if it pulls back, are they going to buy on a discount? Okay, so I like to buy things when they're 50% off. If there's a nice TV for $1,000, a beautiful 65-inch LED, it's $1,000. And then all of a sudden on Black Friday, that same TV is half price, $500. I'm going to go in and buy it. Why? I might buy two of them. I might buy two for the price of one. Why not? It's a good deal. So when the market retraces back down, why would it not be a good deal to buy back down in here? So maybe that's where we get a pullback and this area acts as support. So what I'm doing again is I'm bringing this zone into Happy New Year, January 1st over here. Okay, so we found a higher level maybe of support. And then I also like to look bring it to the left, and then I kind of like back test it to see how it reacted in this area. So you see right here, what is 50% of this big red candle? Open and close. Half of it is right there. So in this situation, if I made it red here, it's below, it came up green, got rejected. Came up, got rejected. Here we've got the candle close above, and when it came there, it didn't respect the area to come back up. They pushed it right back down. So I can see it kind of acted as resistance in the past, and now it could be support. Okay, and one more level. Okay, so now I got a zone from this purple. So if they come back down tomorrow and they break the low of the day and it drops down here, okay, I measure that zone. If I'm trading this zone, purple to the green box, it's approximately 150, maybe 200 pips down there. Okay, not bad, not bad. That's enough big range to scalp, even for intraday trading. But what if it comes down and does not reach this box? Where do you think I'm going to place a yellow line? Just guess. What do you think I would do? If you were me, what would we do? I look at zones. Purple line down to here. So all I have is this big green candle from right here to here. Again, find half of it right there. Find half of this volume from right here to here. Half of it is right there. So I'm going to place a yellow line right there. Right there. So you guys know what I did right there? Okay. So just from right here, this green right here, 682. Okay, 681. The 681 is a nice number. Okay, right there to the purple line. Half of it is right there. But I look to the left of the chart to get actual data from the market. So I see a wick, I see a wick, I see a wick. I could bring it up right up to there. And you see how I get that wick? I get that wick, I get that wick. Do I get any bodies? And 50% like of that big bullish candle right there. So I'm going to keep it right there. Right there. And so if it pulls back, it could make a support right there before it gets down to this one. So I'm just trying to make my blocks in the market. You know what I mean? I'm trying to get my blocks in the market. Okay, before you have any live liquidity feed, all we have are candles. So we got to kind of assume where these blocks will be in the market. If you have a live liquidity platform to complement your trading over here, it's a bonus, because then you can see the actual heat in the market. And then if it coincides with your analysis, you know you're doing something well. And then you got confluence, and then you got confidence. And so that could be another support level. And then I see over here it was resistance, resistance, resistance. Now volume above, it might turn into support. So now we did everything for the downside. If we get a pullback tomorrow, let's assume this thing is continuing to be bullish. Now, what do we want to target? Our high of yesterday, right there, the high of yesterday. So I'm going to draw a yellow line up there because that's a critical daily level. 34,930. I want to put a purple line at our high of the day. We're right at our high of the day. So our purple line might be insignificant right now, but just to show you, we are at our high of the day up there right now. Okay, so we could continue to push and test the high of yesterday. If it comes up and it's a lower high, they might reject it. If we come up and we break out of here, okay, remember the big supply zone, but look at what I have. I can look at the actual date exactly when US 30 was trading in the supply zone. So we can look right here on September 15. We came right in there and they rejected it right there. We also came in here on this date, August 31st, end of the month, came up and they rejected it. But you see now, I kind of see some bodies. I see some wicks. Maybe I want to grab a couple of these. So I'm going to place a yellow line right here. Right around here. You don't have to be perfect, but I get purple, or I want yellow right here. Okay, so I placed it right here. I see this green body close. See the pullback right there. Yellow line, back up. See this big red candle that came down? It stopped right there at the yellow line and went right back up. Over here, the green candle kind of impulsively broke a little bit above that yellow line and back down. Also right here, it came right up to that yellow line and got rejected. And we're just breaking 35,000. Psychological number, 35,010. So what happens if we continue to push green? We break through here, the high of yesterday, and it continues. We might come up right up to that yellow line and then get rejected, and it might go down. But if we continue breaking this yellow line, it will target that big wick right there. 35,100 right there. Okay, I can continue to do this. I can go up the chart and look exactly at every single zone up there. One more would be like right up here and here. Okay, so we could continue to do that. But we are coming in a zone of supply where they rejected it here, they rejected it there. That was a lower high, lower high. So the supply is coming down on a higher time frame, on a weekly and a monthly. So we're coming, this again, yesterday was a lower high. So we're coming up strong right now. We'll see if they take it out. Maybe London and New York, they reverse it back down, okay? But it might be strong and break through here. If you look now at RSI, okay, on the daily, RSI is approaching 68. So remember, it can get up to 70 and have a small pullback. But if buyers keep buying, it could break right through here. Okay, so our daily candle is strong. Following yesterday's big bullish candle, okay, there was a little bit of a retracement at the end of the day. They gapped it up. We filled the gap right there, low of the day. We're coming up bullish. We're going to see if we can test the high of yesterday and see what happens. If we start to sell down, maybe if we break our low of the day, we might sell down into here and we find out what happens at this green box. If this green box doesn't hold, remove it and it might come down to this green box. If this one doesn't hold, remove it and it might continue to come down here. Okay, so right now it's bullish. Okay, we spent a long time on that on the daily, but hopefully that helped. Okay, with top down analysis, because normally I go about 5-10 minutes on a chart on top down because I don't normally explain all this, but hopefully you guys learned something new there. If you guys learned something new, hit the like button. If you guys took something away from that analysis on US 30, this overall analysis, what we just did here, okay, I talked about a lot of things here. So if you got some value out of that, please guys, if you can hit the like button. It's late over here. I'm putting in some work with you guys. It's 10 p.m. almost. We got one more hour together, so let's get moving now. Okay, so now what I do is I dissect the daily candle because I don't want to just sit on the daily candle and just talk here all night. I want to get ready to trade. So what I do is I break it down into smaller increments. Some traders go to the 4-hour, and if you do, perfectly fine. That's perfect. Some traders will go into 2H, 2 hours. If you do, great. God bless. Perfect. I personally go into 1 hour because I want to find out the 1 hour moves. Okay, and at specific times. So the 1 hours that I concentrate on are this time, like 8, 9 p.m. Okay, that's when the futures market opens up. I like to also pay attention to 2 a.m., 3 a.m. Eastern. That is pre-London and London market open. Even if I'm not trading, even if I'm sleeping at that time, when I get up, when I'm ready to trade, I take a peek at what happened at that hourly because that's a lot of volume. If we just look at all these charts at 2, 3 a.m., we're going to see bigger body candles because that's the influx of European volume. And other times you need to pay attention to is the 8, 9, 10 p.m. That's the best one, in my opinion. 8 to 9, you have some critical news. Like at 8:30, you had CPI, you have PPI tomorrow. Sometimes we have NFP. We've got a lot of red folders at that time. Then go into the next hourly candle, 9 to 10, 9:30 specifically, you got Wall Street market open. That is volatile. And then 10, and then it kind of cools down mid-afternoon. And also power hour, 3 to 4 p.m. Eastern. That's when Wall Street closes. That's another important hour that you should be following. Okay, so again, these are hourly candles. Look how beautiful these things trade. Okay, hourly candles, they make resistance, they make support. If you wait for volume to see what it's doing when it pulled back, higher low, it's increasing. If you draw like an hourly area of support right there, you can see, did it come down in here? No. So they held it and now it's coming right back up. When it's breaking out of here, look at the times when it kind of breaks out. 9 o'clock, got a big nice bullish engulfing candle. 10 a.m., look at the pullback. Red, it came right back down, tested, came back up, closed strong, right at the resistance. Then 11 o'clock, you have your bullish impulse breakout. So what I like to do is I identify where my hourly resistance is, and I dissect the hourly candle. I go down to 15 or 5, and I like to trade on the 5 or the 1s, and I get early entries, but then sometimes I ride that nice higher time frame volume. Okay, and then look at how choppy it gets over here. This is market close, 1600, 4 p.m. And then this is the Tokyo channel, and then we get into 6 p.m., the worst time to trade. This is called the Tokyo channel, 6 p.m., 7 p.m., and then we start at 8 p.m. That's a futures market. Look how small, there's no volume. Okay, remember like yesterday when we were trading that time, it was very choppy. It's mostly choppy like that. If you trade the Asian session at that time, 6, 7, 8, 9 p.m., you're not going to get the best volume. Okay, but good for education. And then you see when it starts to open up. When does it open up? 2. That's pre-London news, and then London market 3 a.m. And then we get the big explosion right here when there's news in the market at 8:30. So what are we doing on the hourly? We pushed up, closed above, pulled back, still holding above 50% of this big hourly candle. We pushed all the way up. When did we get rejected? We got rejected at 11 a.m. It came back down. Look how it's holding our support level that we figured out on the daily. And then again, 2 o'clock, they brought it right back up. Power hour, 1500, came back down. This is where they closed it, that gap up I was talking about. And then you see how we're just trading in here. So our hourly candles got rejected there, got rejected there. We're coming right back in. Remember, this is the bigger area of supply. So this might be a good setup coming up to maybe sell the market. Let's see how we're flagging right now. Like here, we got the hourly uptrend from the bottom. Okay, we can all agree it is ascending. Higher low, higher low, higher low, still pushing. But we do have like this wedge formation up here where it's kind of, I'm going to stick with the bodies, body, stick with the bodies. Yes, I can go up to the wicks, but the wicks just represent the impulse move and it got rejected. Volume closed inside here. So you see how we're kind of in this wedge. So maybe what we're looking for is maybe they do push it all the way into this red box, maybe that specifically that yellow line, that 35,000, and then that's where the market drops down. Okay, it might not happen. Maybe it continues to break and then higher low and continue to squeeze out of here. But what we got to do is maybe figure out when they're going to sell this market. Let's take a look at this hourly RSI. Okay, look at it. Okay, so see how, look at where the RSI went to on the hourly. 85, 86. If you were selling any of this, you know, with the RSI getting out of control, remember the really silly indicator, you're getting destroyed. if you thought to sell on the news. Anytime you're looking to sell a freight train, you're going to get punished, okay? So you have to be very careful. Don't just sell because you see RSI is getting overbought, because then they're going to short squeeze you and continue pump it up. So it's safe to say, if they bring it one more time to grab liquidity in there, maybe the pending orders, I can see the strength is decreasing, so that is showing me divergence, but it's not there yet. The sellers have not closed it below any critical levels yet. The critical levels on the hourly I would be watching if I'm an hourly trader is to see if the sellers can close it below this purple line. Remember, that purple line is important. That's our low of the day. Every time the hourly candles get down here, they find buyers and they go back up. So if we close below here, that might be an opportunity to start looking for sell. But more importantly, this big green box. See, every time we came down there, it went back up. Came down, back up. Came down, back up. So you see that yellow line in there, and that's that critical daily level. So if we break tomorrow here and here, that might be a good selling opportunity, okay? But it might continue to squeeze up here, okay? I don't know what they're engineering, but what they're doing is could continue to push up here, okay? So on the hourly, we are extremely overbought on the hourly. It is showing some divergence, but we're not there yet. It's not there ready to break, okay? So what I'm going to do now is we're going to go to the 5 minutes, okay? And let's just mark up too. See right here where the hourly candle came up and got rejected right there, and it came up again and got rejected. So when we go to the lower time frames, you'll see what I mean by doing this. Okay, so I'm just drawing a small red box right under that yellow line, just to show us that that's where our hourly candles, tweezer tops up there, got equally rejected in that area right there. Okay, we'll get to gold right after this classic. We'll get to gold, one chart at a time. Okay, so now what I'm doing is I'm breaking down the hourly candles. I'm going to go into the 5 minutes. So this is kind of how I scalp. Okay, so I scalp these zones. So you see how I set up my chart and I wait. Okay, so up here, what do we have? It came up to that hourly area and pushed back down. It came up again and then pushed down. Okay, what is that called? That's called our double top. It came up, they rejected it, there's neckline, it came back up, and then they pulled it down. Triple top 3 times. It got pushed down there and there. So 3 times confirmed it pushed down. Let's take a look at the really silly indicator up here. Wow. Okay, so look at how overbought the 5 minutes were when they released the news. Okay, it didn't break down until 11:30. 3 hours of being overbought. Okay, finally they closed it below and then got the sell. Where did the sell come down to? That's it. It came down right there and stopped. Came back up, did not close above that purple line, that area, pushed back down. Now we come right back up. This is the bigger top. Okay, so one top, this whole area looks like one top. There's the second bigger top. They brought it down, but you see no 5-minute volume is closing below this area. Every time it's coming back up, coming back up. So we might be coming up for the 3rd time up here. Triple top. 1 big top over here, 2 big tops. This might be the triple top coming. And again, we're still overbought. Look at the RSI. It was 75 just recently, okay, and 70. So we are still completely overbought, but the buyers keep bringing this thing up. So maybe what we got to do is we got to let the market come up here and test this red box. That might be an area possibly to sell the market. So what I'm going to do tonight is I'm going to place an alert at the yellow line up here. See the yellow line? I'm going to now right click, add alert up here. Yes, sir. Put an alert, create it. So hopefully I won't get the alert when I'm sleeping, because then I'll have to wake up and trade it. But I'm going to get alerted up here at 34,930. So if the buyers bring it up here, I'm going to get an alert, and then I watch to see, will it get rejected? Will it close? Maybe I'll look for a scalp to sell down. Maybe it continues to squeeze up through here. Okay, but we got to see volume closing above this red box. Okay, because this is what could happen. If the buyers bring it right back up here and they close it above, I have to flip this red box green below me because it might hold for support. It was resistance right here and resistance right here. But with volume closing above, it might turn into support. Then all of a sudden this is holding, and then the buyers are bringing it right into here and continuing to be bullish. Okay, there's no This doesn't need to sell off. Okay, a lot of traders think that this has to sell off. It doesn't. It could continue going bullish if it wants. Okay, but now on the 5 minutes, we have zones too to look at. See where they kind of gapped up the market and we kind of got rejected right here. So we've got a minor zone. So if I'm getting ready to scalp leading into 11 midnight right there, kind of resistance, and it turned to support right now. So see how the candles are above green. So this box, I flip it green now. This is more of my short-term support area on the 5 minutes. Okay, and what I could, and then there's my big overall hourly trend line. Every time the 5 minutes touch the trend line, it goes back up. Come back down, touch the trend line, goes back up. Touches the trend line, daily low, goes back up. So what I could do is I could also wait, maybe it's a lower high, and then sellers bring it down here and they close it below here and it comes back up. I'm going to flip that green box red. It's below the trend line and then maybe it gets rejected. Then I sell. Then it might come down to the low of the day down here, the purple line, and then if it breaks, maybe we trade down into here. And then when it comes down to this big green box, if it does, decision time. If you're in a big sell, you got a decision to make down here, because look at every time it came down here, it went right back up. Came down in the green box, back up. Came down in the green box, back up. If it comes all the way down here, again, this might be demand, and we might see buyers bring it right back up. So if you're in profit coming down there, you have a decision to make. You got to either, number one, go to break even, or close your trade if you're happy, the entire trade if you're happy with it. If not, just leave a runner and close a portion of your trade. You don't need to close your entire trade. Close maybe 50%, 60, 70, 80%, whatever you're happy with. I normally close 80% and I leave 20% running if I have enough time to do that. And then whatever happens, I got 20% running with a break even, but the majority of my money is still in my pocket in case there's a reversal. Okay, so let's stretch this green box again across. Now I want to figure out where we could be trading. So right now on the 5 minutes, we're consolidating. Green, red, green, red. I could trap these 4 bodies in here and I wait to see something below that purple line. Okay, and I make this neutral. If I'm not trading this, I'm going to chill out and I'm just going to watch to see what happens. If I see it break out bullish, if it continues bull flag and it breaks out of here, where could it go up to? Well, let's look at where there was a body, a wick, bodies right there, wicks, maybe right there. Okay, so let's place a red line right here. I kind of get this big green candle that opened, came right up to that red line and rejected. And it got rejected at 50% of that red candle right there. And then I see what happened here, came up to the red line, back down. Closed above, fake out, back down. See where the volume is? It came impulsively up there, but the volume is down there. So that's kind of like my lower offer box right there. Right there, red, red, bring it across, and I go red. Okay, so what this is showing me is they have lowered the offers. From the big red box, you see how this pullback came right there, lower high, and they pushed the market down. We just came right up green, right up to here, and again, it's lower high than this red box. So what I do, just for visual for like you guys, is right there, red, and then you see right there where we got rejected, red. So bring that across. So now when I'm scalping, I know now I can measure. If it goes green from here all the way up to that red box, I measure the move. So I know exactly what I'm looking for. If it comes up to that red box, it's approximately 11, 12 pips up there. 11, 12. That could be right now because it's Tokyo, okay? It's the Asian market. This zone in New York, that is not a 12 pip zone on US 30. If it fills from here to here, that might be 30, 40, 50 pip zone with New York volume, okay? So the range is smaller because there's less volume in the market right now. But that could be one move I'm looking for. I could scalp from here to there. But what I also got to look for is, do I want to trade an impulse green candle breaking out of here? Or do I want to wait for a break of bulls to break this resistance, get it through there, close it above so that I can flip this red box green, see if it holds here, and it catches the bids, catches the support, then maybe it gets up there. And then I got to make a decision up there. I might be up 12 pips. I go to a break even. Maybe I'll get that impulse break a little bit up to the bigger red box. I go up 15, 20 pips, but it's decision time up there because it could come up there and then get rejected hard and come back down. Okay, so see how I'm plotting my my zones now, so I know where I'm trading. And then if I'm selling below here, if sellers come back down and push it down, and then it closes maybe below there and retest this and gets rejected, I sell down to the green box and I measure the move. Again, what is it, about 10 pips? Okay, 10. If it goes into the green box, 12. If it comes down to the bottom, 15. Okay, so I know now like exactly what the zone is. I know exactly what to look for. I know maybe how much I need to place a stop loss. I calculate it all in my head, what lot size I should be using, how much risk I should be putting on the trade, and now I wait. As it's consolidating, we know, we're smart, we know that US 30 is not going to trade inside this box all night. It's eventually going to try and make a move up here, or it's going to make a move down here. But the thing that we have to do is avoid fakeouts. So to avoid fakeouts, maybe wait for bodies to officially close, unless you're going to take an impulse. And if you take an impulse, you should know how to trade those as well. Okay, so wow, guys, that was a long top down. Okay, so if you want to use these EMAs, EMA 9, we are above the EMA 9. If you want to use EMA 200, where's our purple 200? Let's take a look where this is. Look at it. EMA 200 is all the way down here. Okay, so you can see that big CPI explosion move. Look at how we really diverged away from the 200 EMA. Okay, so maybe it needs to pull back with some news. Might come test this green box, and then there's the 200 EMA. In case there's an impulse break, it might break right to that 200 EMA and go back up. Okay, but I'll give you guys this chart in 1 second, and now we're going to move forward. Holy shit, it's 10:15. We got 45 more minutes to go, guys. I'm really sorry that I spent this long on US 30, but US 30 is my baby. I love this security. You guys can probably tell. I really do enjoy trading this security a lot. So I take my time with analyzing it. Did you guys like the analysis? Okay, we're going to move on to gold and GJ right now. I'm not going to take as long. We're going to go a little bit faster, but everything that I'm going to do on gold and GJ follows similar everything we do. We're going to go from daily, hourly, 5 minutes, and get it ready. Okay, but let's move over, guys. Okay, in Zoom, I gave you guys the trading view chart. You guys should have it in there, the link, and that's US 30. Okay, so moving forward. US 30 we'll leave right over here. Okay, you see our 3 chart system. I don't have Bookmap right now because they're closed at this time. They open 9:30 to 4 with the Wall Street hours. Okay, so we're getting a bullish impulse breakout on US 30. It's going to close in 3 minutes. So this is the impulse breakout. Okay, so let's move over to gold. I know a lot of you guys are excited for gold, and then we're going to get to GJ. So let's continue moving forward. So you know what we were talking about? The US dollar at the beginning of the call with the news. Look how they fake out the market. Okay, so it officially opened red and came down, and then look at what happened. It took out all the liquidity, took out all the pending orders below here, and then it came down for a specific reason to grab all that money. And once they did, it broke the previous resistance highs. Look at look at the highs right here, right there. Okay, the body is right there. 1948.49. Remember we were trading this shitty range all day in that Asian session yesterday? That's what we were kind of looking for. But it didn't break until there was big news. There it got rejected. There it got rejected. There it got rejected. Here it got rejected. Finally, with that big news, they came down red, grabbed all the volume, grabbed the pending orders. They came back up and broke it from the resistance and pumped it. Little bit of choppy consolidation. Again, guys, if you don't like trading this shit, trap it and wait. And it continued to close above. Look at the retest perfectly and continued. You could go in with your buy. Okay, if anything closed below this area, like the wick, if a red candle closed below, then we could possibly close below, retest this, and then sell it back down. Okay, but you see that the buyers continue to accumulate and bring it out of here. Okay, so let's move over on the daily on gold. Okay, guys, so let's get into this daily now. Gold. Okay, so remember, I could talk for days and days about pivot areas like we did on US 30. These areas should stick out like a sore thumb to you, you know, but I'm not going to get into that because I'll talk again for another hour on gold. Let's get right into it at the critical levels that we can see going forward in trading tonight or tomorrow. Right here, this area, okay, that we have to agree that that's resistance. How many times did it come in here and get rejected? 1, 2, 3, 4, 5, 6 times in here. Did not break above. Do I see any green volume close above there? No. Stretch that box across. What happens when we came in here in July, middle of the summer? We came in here again. Any green volume close above here? No. Supply. Push down. Market broke down. Bring this box across. Okay. You see now. And now we're coming up there. Okay. We're not there yet, but we might come up there tonight, tomorrow, next week, next month. Let's take this to January 1st. Happy New Year. Right there, January 1st, okay? So, can we all agree that that is resistance? We're coming up there right now. So let's find where we found our support. We found some good support right here in the market. And it was resistance right over here. So just looking like right here where we pivoted, right there, green box. Catch the bodies and those wicks right in there and make it green. Okay, so we're going to stretch that across. And what is the zone? It's from 1938 to 1930. Okay, so you see it's holding support. We came down here on Friday and Monday, start of the week, Monday, Tuesday, yesterday, CPI, and we held. Okay, so you see one pivot, hold. If there's going to be a second bottom, we got to identify. If 1930 holds, we're good. Maybe we continue to pick up buyers and we can drive. Maybe we don't even revisit this for now. Okay, maybe it's still bullish. And then bring it to like kind of back test. You see right there, 50% of this big bullish bar right in the halfway point. We closed above it, so it's still holding. Here was the pullback into 50% of this big bullish candle that started to move. Okay, and then bring it again to the left. Right there, it would have been red. And so now you see with the volume above it's green. Okay, so continue going forward. This is our zone now where we're trading from the green box to the red box. If you want, measure it out. So you know, if you're a swing trader, daily trader in here, you know your zone. This is a big zone. Okay, 1980 to 19. This is big. Okay, this is a $40 move. This is 4,000 pips in here. 4 big moves. Okay. Points, pips, whatever you guys want to call them. Okay, but let's now just dissect what's going on the daily right in here. Okay, so we closed below here, bearish. We opened, ignited, short wick, daily candle dropped, found the buyers, came back and closed. Hanging man candle. Okay, we still got to respect the red volume above us. Next day it opened green. Did we test into 50% of this body? No. So it's a lower high, and we continue to fill the rest of the wick, come all the way down, close near the low. One more day, it opened red, came down here, came back up with buyers, and then we closed, see, around 50% inside here. And then one more day, 3-bar play, red brought it all the way down here and came back up and came back up. So we found our support in here. Now, what we got to watch is critical levels, okay, right there, body, and a wick. So I'm drawing a yellow line in here for now, because this might play, look at, oh my goodness, okay, yellow line. All I did was right here, body, and right here, and look at the number, 1950.15. Like, it does not get any more psychological than that. That is a hard psychological number, okay? So that is a point of reference. In case we pull back, we want to hold 1950 support, because if we don't, then it's going to dip down into this big green box. Hopefully, we get higher low support on gold, and we get some bids accumulating at 1950 block to hold it up, okay? But other critical levels, right here, body and a body. Let's place a yellow line right here. 1958, 1958.585, okay? Beautiful. Let's use that numbers, okay? So if we pull back, we want to hold 1958 in here, okay? So far, what happened today and following yesterday's CPI? So we had the big bullish candle. What was our high yesterday? Our high, look at equal high to this candle on November 8th. And it also lines up with these bodies of support right here. Guys, I'm not making this shit up, okay? for real. Like look at these levels right there. If we did a yellow line at this body and that body, regardless of the wicks came down and picked up liquidity. Wick came down, follow where the volume closed. It closed right here, closed right here. This red bar came down to the yellow line, back up. This one, the red volume closed below the yellow line. Look at the retest. It came up green right to the yellow line and they rejected it. Look at yesterday, CPI. We came up bullish all the way exactly right up there, 1971. That wick is equal to that wick. It's lined up perfectly with those bodies, okay? And it got rejected. And we closed with good buying volume, still closed above these bodies. Now, they opened it side by side. It opened and came down red. So let's find our low of the day for gold. Right here, 1961. Let's go purple line for the low of the day. Okay, so we already tested the low of the day, found our buyers. We came back where we opened, continuing to push up. But we've got a long distance to drive to fill yesterday's high. Okay, so we are at our high of the day basically right now on gold. So I'm going to draw a purple line at the wick right now. It might be insignificant because we might be continuing to break this, but if we do, where could we go? Okay, yes, we could go up to test our yesterday's high, the yellow line, but it might come up and be a lower high. And then there's my body to body right there, 1969. That's $2 away from 1971. That's about 20 pips. It could come, go yellow. Again, I'm going to go yellow. Only purple from my high and low. Yellow, other critical levels. So it could continue to come up bullish and come up to right there, body to body, and it gets rejected there and then push right back down. And that will be a lower high from yesterday's tweezer tops, equal highs. Okay, so just trying to get some levels now where we could go. If it continues to push bullish, if we come up to here and we go up to 1971 and we break out, we've got a lot of imbalance to fill from there. Okay, I could go again. What's half of this red candle? But I also like to look at a body to body right there, 1974. It could move right up to that. I'm getting my scalp zones, okay? This is not just for like swing trading. If I was swing trading, I'd look for bigger areas. Like if I was a swing trader and I was buying a daily candle, I would be looking to test this big red box and see if it can impulsively break out to 1993. Remember, we always talk about this. This level, it's a big level on gold, right there, 93. Okay, so if it comes up there, I'd look to see what will happen up there. Okay, but these are little scalp zones on the 5 minutes that I'm creating. Okay, so far gold is opened, respected, high low. We're still got volume closing above here, continue push up, but we have to respect the wick. So we got a lot of work to do to continue to fill up here. Let's see the daily candles. We're just above 50 on the RSI, so it's still strength, a lot of strength up here. We could continue to push up. It might pull back and test 50 right here on RSI, and that's a neutral area where it might just consolidate. Okay, let's now break down daily candle into hourly increments. Okay, so obviously the big move sticks out at 8:30 CPI, and then I can see big moves right here, 10 a.m. on Monday. 11 a.m. broke out of here. Look at all this consolidation, the market undecided until we had the news. Once we had the news, I told you the hourly candle went down bearish, come down to pick up liquidity, and look at where it came down to. Okay, so I use white lines as well for hourly. Like look at how specific where it came down to. Okay, if we just look at the hourly low where they brought it down, let's use a white line for hourly, and then kind of like back test it. See right there, the candle came up, got rejected right there. It impulsively broke, closed below there. Came up, touched the white line, rejected. Came up again, touched the white line, rejected. There was no real hourly volume closing above that white line until 11 a.m. on Monday. And we flagged. It flagged for quite a while. Like if you look at the hourly flag, that's the hourly flag right in there. If we consolidate all of that, a big bull flag, it accumulated for a long time, and then look at what the news. It came down, they took out the pending orders right to 50% of that big bullish candle, crypto, yeah, you got it, and closed strong right up there. Look at the pullback. It opened, did it come down to test the yellow line or 50% of the bullish candle? No. Higher low, fill the wick, and continue pop. So Where are we now? We're nowhere near this zone. Look at where we are now. Okay, so remember these critical yellow lines? Since they're so close together, I'm going to get rid of this one. Okay, so this is where I manipulate my charting. This yellow line is way too close to that yellow line. So I'm looking at the hourly. So I'm going to remove 1969. I'm going to keep this yellow line. And what I'm going to do is I'm going to place an hourly resistance from there to that red wick and bring it across. Okay, so that's hourly resistance, red. So the bigger red box is the higher time frame. So what I can see is they've lowered the offers to 1971 and 1969. So it got rejected there. Again, stretch this across. We might be coming back up. That's why. It might come back up and then double top. There's one top. Might be two tops up there, and then they reject it. And then what I'm looking for is to look at, we have not closed any red volume below that purple low. If it closes below there, stop right there, come back up, retest the purple line, get rejected, and then we get our gold coming back down to 1950. That could be a possible move going into New York tomorrow, okay? But it could also continue to pump, knowing gold. So we'll see what the PPI results are. And again, if it continues to squeeze, if gold is coming up here, might break. We want to see if it will close above, retest this, we make this green, and maybe gold is pushing up to the 1980s. Okay. But I can't speculate what's going to happen until the volume comes up here and tests up here. So I want to be ready. I'm going to place a gold alert at 1971. Same thing what I did with Dow. Add alert, yes. Create, perfect. So now I got an alert waiting for me in case it comes up there. And RSI, okay, so when it peaked up there, we were heavily overbought up to 82. They kind of cooled off the RSI, but you see it's coming right back up bullish. So that's what I'm looking for, that bearish divergence. I want to see the strength decreasing, and maybe if they do a liquidity grab, then it makes more sense to me. They could be coming up because there could be a lot of pending orders up here, and then it could be a fake out. Okay, they could come up, grab all those pending orders, the liquidity above there with that strength going down. It might be a big move where it comes up quickly here and gets rejected, and then the market pushes down. Okay, and that would create that liquidity up there. That's a possibility as well, but we do have to wait for that move. Okay, it's not developed yet. What we got to do is, like if we want to get ready to scalp the markets, now I'm not worried about this big zone up there because that's resting. That's resting at 1970. Okay, that's a block resting in the market. But what I got to see now is an hourly candle came right up there and got rejected. We just came right up there and got rejected. So you see right here, the wick right above that purple line right there to there. Okay, so I'm getting ready to scalp the markets. So that's red, lowering the offers from this big block and the block above us. Okay, so you see a higher time frame big red block. They lowered it right down to the hourly, and they've kind of lowered it right here. So where's our support on the hourly? It's very visual. Like if you cannot see that it's holding that purple line and holding that purple line, that's my green box. So I'm trying to trap it now as much as I can, and then I wait patiently. If you're an hourly trader, trap this entire zone and wait for a move up here, but be careful. That's where they might get you, because then that's where they might draw it. I'd be looking for a big sell below here, below 1961, guys. If gold on the hourly falls back down in here and we retest this and get rejected, that could be the big drop coming down to 1950. Okay, but it's not there yet. We're nowhere near that. Okay, so now what I do is I'm getting ready to scalp the markets. Do we have critical levels on the hourly? Absolutely we do. So I use my white line right here. See what I'm doing? I'm really consolidating it right here. There's my body, okay? It came down red and closed right there. This was a pin bar candle where it was green, got rejected, came down, closed below the white line. There's my impulse break. Volume closed below. Here we retested the white line, rejected. We came up, retested that white line, 1964, rejected. We closed right there just this briefly, and look at the candles. Okay, follow your price action. Low, short wick, it's like a firecracker. Ignited, pop, that could have been a nice trade right there to fill from right here to come up to that previous high right up there. Okay, so now it looks like a double bottom on the hourly. See how we came down, one bottom. There's our neckline. There's our second bottom. Now we kind of closed right there, we're holding, and we had that bullish breakout, break above this high and come up to the previous high, lower high. So we're trading right in here. If it continues to break out right there, break out to those two bodies, put yourself a white line right here. Easy peasy. 1967, 1968, okay? And then we know where we could be scalping to, those lines we use for reference. And also if we're breaking down in here, we've got our big yellow daily, 1958. And if it continues, it might not fall all the way down to 1950, but there's your hourly pivot, 1954, halfway. Right there. Have your white line right there as well. And sit and wait. Now what we do is, I don't want to sit on these hourly candles. I want to go into the fives. So let's go into the fives, and here's our scalp zones. Okay, so this is how gold is trading right now. If you want to trade this garbage, this is what you're doing. Okay, you're buying, getting a few pips, coming up to resistance. You could be selling, getting a few pips coming down, but this is too choppy. Okay, but now what I see is, I see it trending bullish. Okay, higher lows on the 5 minutes. Let's just draw a trend line right there. So visually see it ascending, higher lows, higher lows. We get up to that hourly resistance, and there's the break. Look at the time break, 2200. Okay, so a new hourly candle. That's when we pushed right up to there. So if I was scalping that zone, again, you guys know what I do. I measure from here to the red box. It's approximately 15, 16, 17 pips up there. Not 30 pips, not 50, not 100. Our zone right now where the volume is trading is 15 to 17 pips, minus your spread, minus some slippage. That is the scalp zone if you want to scalp this, okay? If you don't feel comfortable trading this zone, trap it, okay? I can trap this thing right here and wait for a move above or below. You guys are smart. You guys know that gold is not going to just trade inside this zone in the entire night. You know that they're going to try and make a move to continue to break it above here, maybe retest this, and it goes up to here or to there. It could be a false breakout. It could do this. That's what could happen. It could like impulsively break above there and push back down, close below here, retest our supply, and then push down. That's a head and shoulder pattern. Left shoulder, head, impulse breakout, grab the liquidity, retest our right shoulder, and supply and drop. Okay, that's a possible move as well. So you got to be ready for what could happen. And then again, if I'm trading from, if it closes above there and I'm buying, and it comes up to that white line, it's decision time. I'm a scalper, so I might be trading 1 minute or 5 minutes or 3 minutes. I measure the move from here to there. It's approximately 12, 13 pips. Not 30, not 40, not 50. 12, 13. So I got to understand that my scalps could be 7, 8, 9, 10 pips, maximum 12, until I see what will happen up there. Yes, it could break a little bit more, but that's all it could break to those bodies, 1968, 58, and that's it, and come right back down. Now, if you want to really trap this, like if you're, I'm an inside scalper as well, like I really like to scalp these markets right there. I could really condense it, consolidate it right down to there, and you see how it's still holding above 50% of this big bullish candle at 2200. So what I could be doing is waiting for a red bar to break, close, maybe retest, and drop. And I could get in early for the bigger hourly break, and I'm already in the trade. Okay, that's more if you've got experience scalping the markets. If not, you continue waiting for the bigger moves. Right now, it's Asian session, Tokyo, so the volume is not the greatest right now. So, but you know, come like London, 5 a.m., 6 a.m., 7 a.m., 8 news, these zones are going to start to open up when we get more volume, okay? So that's our analysis on gold. If you want like to add your EMAs, we are still currently above the 9 EMA. We're testing it. Our 200, again, is all the way below here from the CPI big move. And I will give you guys this chart. So, okay, so guys, did the gold analysis help you guys out? Do you understand my levels, what I'm looking at? And I can scalp these zones all day, okay? Once I got my chart ready, all I do is I wait for the volume to come to me, okay? we are smart. We know that gold is not just going to trade in here. It might make a move up here. If it does, great. I will be scalping just like these candles that came up here. If it starts to break below this white line, it could come down here. Great. I could sell down in there. If it holds this green box, I could continue to buy back up. If it closes below here, I'm scalping down to my next zone. So I'm a zone to zone trader. This is how I trade. And I measure my moves just like a tradesman, just like a carpenter, just like it measures the floor. If you're doing flooring at your house, you got to measure how much supplies you got to buy, how much hardwood floor you got to buy. So just like us, we're tradesmen, tradeswomen, we got to measure our moves. So there's no ifs, ands, or buts. We know exactly what could happen. And then when it comes to that zone, it's decision time. You got to make a move, because if you don't, the market will decide for you. Okay, so that's gold. Let's put gold right. Oh, look at US 30. Okay, did anybody scalp US 30 coming down? That is a proper setup on US 30. Okay, let's just walk through US 30 right now. Okay, I'm sorry guys, but I 100% would have taken the sell here to come down to the green box. Look at what happened at this candle, 22.15. Was that not an impulse break to the high, 34,940? Do we see any green volume close above there? No. It got rejected and it closed inside our consolidated box. But that candle is telling us something. It's telling us it came up there and picked up the liquidity up there. It grabbed some money up there. There's some pending orders sitting, waiting up there. It grabbed it, and then look it came back up, retested, big bearish candle, closed below. This is the first candle to close red below this zone. There's the confirmation number one. It closed below. Confirmation number two, we assume it's going to open up green because there's bids waiting down there. So it did. It opened green, and look at the official retest. It came up to approximately 50% of the red body and retest our purple line and got rejected and closed as a shooting star candle and broke the wick. When I see this type of setup, I'm selling down here, placing my stop loss maybe just above these bodies or above that red zone, and then I take it coming down into the green box. That's a scalp. Okay, I know it's fast. It might be 1 or 2 or 3 candles, but that's what scalping is. It's to take a move like this and just come down to your desired location. So to break that wick and come down there, it's 10 pips. 10. That's it, guys. 10. 10-0. Not 30, not 40, not 50, not 100. That is that's the zone. That's it. That's all it gives you. And if you don't make a decision down there, then it pulls back. It did this to me on gold yesterday 10 times. I went into drawdown, back to break even, a little bit of profit, back to break even, then it finally hit my stop loss. But the zone was just too tight. And that's what we look for, a scalp like this. I know it's tight right now. It's the Asian session, but a trade like this in New York, I'm telling you guys, I'm not lying to you. A move like this is not 10 pips. US 30, when we're moving 8, 9, 10, 11 a.m., this move from right here to there, that's 30 pips. 30. It's 3 times more volume than what we have right now. And that is a nice execution with minimal to no drawdown, because you follow what happened. The liquidity grab to the high, the close back in here, the pullback, higher low, trapping the buyers, close below, confirmation, your retest, it's go time. You got, like, if you're a scalper, that's your trade setup. I don't know how else to explain this. Okay, so that's US 30. We got gold still holding higher lows. Okay, so if you just draw like a red line right at these bodies right there, body, that pullback right there to 1965.338, it's still holding support. So similar thing. If I see gold get rejected at this red box and come down, and it's very, very similar to what US 30 did, kind of close below there and retest, that's where I'm selling. And I measure it from the red line coming down to the white line. 9.2 pips. If it breaks a little bit more, 10. So you can see the zone that you're trading. If you don't feel comfortable trading that zone, you wait down here. This is where I really, really like trap it. And this is where I'm scalping. I kind of scalp inside like this. You know, not a lot of traders do that, but I enjoy that. I'm trying to be a little bit more conservative with you guys. You guys can see I'm staying on higher time frames a little bit. But you guys will learn. Okay, remember, price action is all the same. Okay, so let's, guys, it's 10:43. We got about 15 more minutes, almost 300 viewers. Thank you, guys. I appreciate every one of you guys. Thank you guys for joining me this late at night. I know for some of you guys are in Europe and around the world, and it's very, very late for you guys. For some of you guys, it's 1, 2, 3 in the morning. So I appreciate you guys. If you guys can hit the like button, I really, really do appreciate it. SST really does help us out, guys. Really helps us. We haven't done the Asian session in a long, long, long time. So we really appreciate. We want to find new traders around the world that we can give back and give some education and help you guys out. And so thank you, guys. The likes do go a long way. Appreciate you guys. Thank you. Let's do a Forex pair, okay? Again, I ask you guys, what do you guys want to do? If you want, let's do GJ, okay? Let's do something with the Asian session, Tokyo, JPY. Let's do GJ, top down. I haven't traded Forex in a minute. It's been a long time. Not that I don't like it. It's just I like bigger moves, faster moves as I'm scalping the markets. So that's why I prefer gold or US 30. But Forex is, I learned a lot with Forex, especially GU. I learned a lot. I learned a lot about price action, trading GU. And then once you get comfortable with this stuff, you can figure out what is best for you. If you like gold, if you like oil, if you like US 30, if you like NASDAQ, if you like S&P, whatever you like, you decide, okay? You will know the volatility, okay? So now we're looking at currency, the pound and the yen. This has nothing to do with Dow Jones. This has nothing to do with gold, okay? Now we're looking at the pound and the yen. This is currency related. So we got to flip our mindset now. Now we're trading currency. So you got to come in with a different mindset with how this moves, okay? So number one, let's get started on the daily, okay? So let's do a top-down analysis. Thank you, Iliud. You see, guys, the last time, look at when I traded GJ was like back over here in April, okay? So you see, I haven't traded this in a long time, but I still had my zones, and look at, there's the breakout, close above, retest here, double bottom, and there's break. If I was swing trading this, there's my setup. It doesn't get any better than that. The green candle closed above, it retested right there one time. There's my neckline, double bottom. There's the big bullish candle. There's your consolidation, and then there's your pump, okay? Just like we saw on US 30, same exact setup. Like once you learn your setups, it's going to become part of your everyday routine. It's like you're going to work every single day. You know exactly what your job requires. You know what you got to look for every single day in these markets. It's just practice, 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 okay? I know Allen Iverson, he hates practice, but us as traders, we need practice, okay? So just continue practicing the markets. Don't over leverage a real account when you're practicing. Be humble if you need to. Use a demo account. There's nothing wrong with a demo account. Okay, you don't have to physically put any money in the markets while you're learning. Sometimes you got to learn. Okay, anytime you do a job or you're learning something or you're going to school, you don't get paid. If you go to college or university and you're learning to get a degree, you're not getting paid while you're in school. You gotta, number one, you might even go 3-4 years and you might not even graduate and you're not getting paid. Okay, so same with trading. When you're learning, you're not getting paid. So learn first, then you will get paid after when you know what you're doing. Okay, so let's study right now GJ. Can we see some critical demand levels? Yes, I can. Okay, right over here. There was bodies. Okay, to me, this is something unusual happened on July 27 where the market came down and then they brought it right back up. And look at the days, like a Friday. Okay, so you know, unusual activity, engineering the moves. That was support, support. Again, bring it across. See right there how it fell right into the bodies right there. Liquidity grab, brought it right back up. So continue to bring this zone into the future. Okay, I know we're nowhere near it. Someone's going to say, Ron, why are we even looking at that zone? I just want you to visually look at what I see. There was support, support. This is an unusual move. It just dropped down red, but it came right back up. So to me, what is that? That's a stop hunt pending orders, liquidity grab, unusual activity. Just came down, triggered everything, and went right back up, and volume is closing again above the green box, start that big move. Again, what happened over here? It came down red, but if you wait for the daily candle close, it closed right there. That's unusual activity. They came down there again, pick up the pending orders, and no red volume closing below. Then when it comes into here, it's a higher low. Look at where they're building the support. Did we come back into the green box? No. And then we get that big bullish engulfing candle close above. Why? Because they picked up liquidity here. They picked up liquidity here. And we broke out. Now we've got big resistance over here. So let's do a red box, kind of right there, and bring it across. And now we've got this big daily candle above us. So we're going to keep this box green. Stretch it across, okay? So now look at how black, it's a black chart up here. Now what we got to do is look to the left of the chart. When was the last time GJ traded above this green box? Let's look. Okay, do you see where I'm going? See this box? Bring it across. Now I can see exactly. Remember, I haven't traded GJ in a long time. You guys trade it more than me. What do you guys know? Look at where I'm looking. 2015. How many of you guys came over here to 2015 to find resistance? Be honest. Did anybody come to 2015 on GJ? If you're a GJ trader, I'm asking you guys. Did you guys mark these levels out? Okay. So there was trading above. Look at 2014, 2015. Last time I checked, guys, it's 2023. You know, I smoke a lot of weed too, but I think last time I looked, it's 2023. It's been a long time since we traded above here again. But you can see when it traded above here, you can see where they rejected it. We can find some critical areas. Okay, so what we got to do is we got to identify some areas over here. Up here. Okay, so right here. I'm going to place a yellow line. Remember, critical yellow lines for the daily. Right here, it got rejected 2 times and then pushed back down. Came back again below there, pushed back down. Again, we kind of consolidated here. I can see it get rejected right there. It came down, back up. Here, it came up green to the yellow line, back down. Came up to the yellow line, back down. Here was an impulse break, green candle close above, and then they faked the market back down. So 188.20. And then one more right there. See that pivot right there? 189. 67 right there, another yellow line. So now I got some reference points if we continue to push bullish. So I go back to where we are. See now my levels above me. Okay, so we're at that yellow line right now. Last time we traded here was 2015, and then we got our level above us right up there. Okay, so now we got to see what we could do. Gold is moving. Okay, sorry, let's just check gold really quickly. Okay. So we got US 30. Again, if you want to consolidate really quickly, US 30, we can see right there it came down to. Look at those 3 wicks, okay? And then there's your new consolidated zone. Okay, so if it comes back up, we see if they lower the supply right here, red box again. And you see where it's consolidating now. So we'll see if US 30 can close above here and continue pushing up, or it gets rejected and we push back down. Okay, that's, sorry, I know we were talking about gold, but I just want to analyze US 30 right now. Gold, yes, we're pushing up. So this area held higher low support. We never broke below here. So it's got like an inside green box in there. We see it's still holding. So, and now we're pushed right up to this critical area. It pulled back. So let's see if we can start to get positive green volume above here, and maybe we can push up to that hourly 1967. But it could also get rejected and then come right back and trade in this consolidated area. So you have to be careful. See the spin top? It's indecision. So the buyers are pushing it up, but the sellers are pushing it back down. If we come back down red and we close below here, then it will push back down to the trend line and this green box. And we see, will it stop here and come back up? Okay, that's possible path. I'm just doing some routine paths for you guys. But if it comes down red and we don't pivot at that green box and they push it down here and it closes below here, we flip that green box red because it might be pulling back up there and get rejected, then gold breaks down here. Okay, so I just want to keep those levels for you guys so you pay attention. Okay, so watch and see if we got green volume closing above here. It's still accumulating right here, and there's a lower level of supply. And then if we break down, gold will sell down there. Okay, so just be careful with that spin top. It's an indecision candle right at our supply zone. So it's like a 50-50. It's like a coin toss. Okay, we got buyers pushing up, sellers pushing it down. We still have a lot of time, 1 minute and 20 seconds. It's turning as a pin bar bullish right now. So buyers are continuing to bid it up. Let's see if we get that volume close above. Maybe it might continue to push up to that white line. Okay, sorry. I'm just going to go back to GJ, guys, because we got about 10 more minutes on this call. Okay, so I was on the daily. Remember we were on the daily? Okay. So let's just mark up our daily right now. Okay, so remember yesterday we had CPI. Pound was very strong and the yen sold off. We got a nice strong move on the pound. And what did we do? We came up. That was our high up here. Okay, so what I'm going to do is I'm just going to take that yellow line because I got that from 2015. I'm just going to place it at yesterday's high because it's more fresh. It's more in the market. 188.27. Okay, so we came up there yesterday, got rejected, and we closed right there. Today we opened, it was red. We came down. So that's our low of the day, 187.772. Let's place a purple line on GJ's low of the day, purple. And what happened when we came down there? That's our low of the day. We picked up the bids. We came right back to where we opened, and it continued to push up. So we came up to right there, 188.187. That's our high of the day. And we see it's lower from yesterday, but we're very, very close. So as we came up to the purple line, we got rejected. We still have this bullish volume, so it's still pushing, but we might have now a daily consolidated flag up here if you want to kind of trap this entire area right here and make it neutral. Okay, I just want you to understand that this could be a neutral area where it could flag. It could trade inside here for a couple days, and then we see if we continue to get that bullish breakout or if it retraces from here and then sells off back down in here. Now, if we break above this yellow line to the next yellow line, remember that I had to go back to 2015. If I don't know anything, what I normally do is halfway. And then I look for a nice whole number. There it is, 189. So if I had to place a yellow line inside here, 189 exactly, like right there. Okay, and then I make it yellow, and it's to me it shows from this yellow line to that yellow line, that's like the halfway point. That's if I don't know anything. If I don't have time to go back and analyze, I kind of just go with 50%, and it works. It's a good strategy. But that is one area. So we'll watch today to see if we can continue to fill up the wick, and maybe GJ continues to break bullish up to this yellow line, 189. We're right at 70 on the RSI on the daily, but they could still squeeze up there. They could still squeeze short sellers. If we do pull back, what happens if it gets rejected and we come back down and we break here? So again, we got all of this green volume from like right here. Let's look from the open to where it closed. Halfway is like right in there. But what I can do is look to the left of the chart. When we were trading inside here last, I can look exactly. I don't need to guess anymore. I look at all of these candles. Again, 2014, 2015, 2015, 2015, 2015. Now I see a lot of candles that came up and got rejected. Came up, got rejected. Here held, here got rejected. Right there. Guys, I'm placing a yellow line right here. And I'm not guessing. I see right over here, guys. Okay. So you see how it came down to the yellow line, back up. Here it came up to the yellow line and back down. Here it came up to the yellow line, back down. Here it came up to the yellow line, back down. Here came up to the yellow line, back down. Here it came up to the yellow line, back down. Here it came up to the yellow line, back down. Here it came up to the yellow line, back down. Okay, so you see what I mean? I'm not guessing. And now we've got our levels set up if it does trade over there. Okay, so it's right up here to push up to there. But if we pull back, you see, right there, 187.30, and it's kind of halfway from the volume from right here to here, halfway. So again, like what we did with US 30, let's place a green box, a little bit above, a little bit below, and stretch it across. If it ever comes back to us, we could buy right there. It might be a pullback buy at demand. Okay, and it's about nice area, 50%. Okay, so if it ever retraces back, if it comes back down red, it could come down red and stop right there and go back right back up. But if I'm trading or I'm selling from here down to there, I measure it. So I know exactly what it is. Okay, on the daily, it's going to be a little bit different from scalping, but this is FX, so that's about 45 to 50 pips. 45, 50 pips. That's the entire zone to stop right there. If it continues to push, yes, it could continue to break down and come down. But right now, it's still bullish. So we cannot sell this yet until we start to see what happens up here. So now what I do is I dissect this daily into 1 hour. Let's find the 1 hour. So obviously, the big 1 hour move started CPI, okay? You see, it was good for the pound, continue push up. Again, when you learn your basics of your candlesticks, that's why I love teaching on 1 minute or 3 minutes or 5 minutes. It's faster. But on the hourly candles, same characteristics. If I didn't tell you, if I told you these were 5-minute candles, look at what happened. It opened red, came down. Support. It pulled very, very strong. And look at where that's the high. And then just a small retracement right there, and we closed. So we basically closed near the high. It's got a very, very short wick. It's like a firecracker. So if you light a firecracker with a short wick, it's going to blow up. It's going to explode in your hand. If it's got a longer wick and you light a firecracker, it's going to take a while for it to explode because you've got a longer wick. So if you were ever a kid and you played with firecrackers, then you know exactly the analogy that I'm trying to talk about here. So, and then the next candle opened bullish. Look at this tiny wick where there was basically no selling pressure. This is what we call an ignited candle. It's ignited. It opened bullish. It opened in demand. So all we had to do is just pop that wick, and it's very short. Once we get it, I love scalping these moves, and it performed perfectly and just pushed and filled the entire zone. And if you're scalping or trading hourly, it's all the same characteristics. Okay, you just pick what time frame is best for you. I prefer scalping the markets as opposed to hourly or 4-hour daily trading. But let's look what the hourly is doing now. So it came up here, got rejected. Okay, so that is resistance on the hourly right here, like right up to there, and those bodies. Okay, that's resistance, right? Red. We see it got rejected there, and it came down. So this is support now, right here. Support, green box. Okay, so let's stretch our green box across, and we see that it's making a higher low, higher low, higher low. So they're moving away from this area of support. They're increasing the bids, but we're coming right back into supply. Okay, so see the flag now. Here's our supply. Let's bring it all the way across. Bring your demand. And this is that consolidation zone here, that neutral zone. If you don't feel comfortable trading this zone, again, you wait for something to happen at critical areas. I can see a double top forming. It came up, back down. There's our neckline, support, came back up, and now it might come back down. But if we come down and we break this later today, we break, close below, we flip the zone, maybe red, it gets rejected, could sell down to the green box. And then it could come back up. But if it breaks down, it could continue to go bearish because all we have is that big green candle. Okay, so you got to use your zones for support and resistance. And if it continues to push, again, if I want to now inside scalp, you see my hourly bodies right there. So I draw a white line at those hourly bodies, white for hourly. Okay, I look at the number 187,977. So very, very, very close to 188. Nice whole psychological number. I like that. So now what I could watch is if the hourly candles come down and close below this white line and I could scalp that move coming down there. Okay, if it continues to push bullish and make higher lows and we come back up here and close, then this thing could continue to be bullish. And then we've got our zones above us ready. So all we got to do is wait for the market to decide where it wants to move, and you and I can trade it either way. But we got to be patient, we got to be disciplined, we got to wait for the right timing. Now we break it down to the 5 minutes. So now I get ready to scalp. So I got my zones. So if I'm a scalper on the 5 minutes, see when it came up here, it broke the high of the day, rejected, closed back down. It came up again. Did it touch for a double top up here? No, it's a lower top. This is a M pattern with a lower shoulder. So what it's telling me is the supply was there and they just lowered it down there and continued to sell it off. And then it sold off all the way down to the support. It came back up. See the white line now? How it plays into effect where I just placed it. So now if I'm trading GJ, I could be waiting now the 5 minutes to break below these 5 minute level, like right here, like right there. So I could measure from this red line down to the white line. If I scalp that, I know it's not going to be a lot because this is FX. So from there to there, it's about 7 pips, 7. Take away 1 for your spread. But that's normally what we look to scalp, from there to there. If it continues to break, it might not come all the way down to the green box. Why? Because 5 minutes, they make their own support, and there's support on the 5 minutes right here. It was support there, support there, support there, and support there. So my next sell could be, or if I'm holding the trade, to break this white hourly support and continue to the red line. And then when I measure that move, I know it's more than 7 pips. It might be double, 14. 15, like right down again, remember, 7 to the white line. If it continues, 16, 17 pips to the red line. And then it's decision time. If it continues with higher time frame selling pressure, we might come into the green box and it might be a 20 pip scalp. And then make a decision in that green box, because every time it came down there, went back up. Came down, back up. It could come all the way down in the green box and go right back up. But right now, you still got to wait for it, okay? Just consolidate. This area used to be resistance, resistance, now turn to green support. Okay, so again, if you want to scalp inside here, you could buy off this green box, come up. It's not going to be, it's again going to be about 7 pips. Coming up to here, right there's about 8. If it comes up to the high of the day, you're looking at 10 pips. So this is our scalp zone. Okay, if you want to buy the green box, it might come bounce 5, 7, 10 pips. If you sell from up here, it might drop 5, 7, 10 pips down to the green box. And use these boxes throughout your trading. If this is too tight of a zone for you, then you wait. You wait for a bigger move. Let's wait and see if GJ sells below here, and then we flip that green to red, and it gets red, and then we come down here. That might be a nice move, but it's not there. Set an alert right here. 188.05. Place an alert right there and wait for the sellers to sell it down to you. Okay. Also, see the purple line? We came up. How many times did we come up here? We came up here at 12:40 p.m. Eastern, got rejected. We came up again at just before we started this call, and it got rejected. And over here, got rejected 2 times. If it continues to, buyers push it back up and close it above that purple line, we use the purple for support, and we could look for a buy to take out those previous highs, and then we go into our black chart up there. That's where we have not came into these levels since 2015. So that is new charted territory up there. You know, we haven't been trading in this area since 2015 on GJ. So you can, you understand where we're trading, okay? And then if you want to add your EMAs, EMA 9, we're above it. 200 is all the way down here because of the CPI. If you want to do an RSI reading, okay, see how it came down to the 50 and it held that psychological 50. That's what I was talking about earlier, and then it bounced. Okay, so I can see the strength from here, lower high there, and a lower high there. So if they continue to come up at the high of the day, I'm thinking that they're coming up for liquidity up there. Okay, the strength is showing us it's decreasing right there. So it's decreasing right there, and it's decreasing right there. So if these guys try one more time to come up and take out that high of the day, there's money sitting up there. There's liquidity. They might come up and fake out the market and then bring it back down, and then the market sells off like that. And that's that head and shoulder pattern. Left shoulder, the head that impulsively breaks out, grabs all the liquidity up there, tests the shoulder, and then push down. And then with the strength decreasing, that's where we might get that selling pressure. But you got to be patient. You got to wait for it. Okay, that's what trading is. 99% of trading is waiting for the move. You know, but take your time doing a nice analysis too. It helps. I'll give you guys this chart in Zoom. And guys, we're over 11 o'clock, 250 viewers. Guys, if you can hit the like button, appreciate it. We do a lot of education in the Asian session, so I hope you guys enjoyed it. Okay. We got a lot of time to trade together, but analysis is important as well. So just looking at US 30, came down to the green box, held. Now we might be coming back up. It might push back down. Okay, it might be a lower high. We might come up to this zone. Gold, what happened with gold? It broke and closed above here. So that red zone, flip it green for the time being if you're going to continue trading. And let's see if it continues to hold. Okay, right now it's holding. So remember, the target could be that white line up there. If it comes back down and closes below the green box, then that's where I could potentially look to sell. Okay, so I wait for something to happen. I could wait for selling pressure now to push it back, close it below here, retest this, make it red, and then we come down to this green box. And then if it continues to break, we come down to that hourly support line. Okay, that's what I could be looking for on gold. So we did analysis on US 30, gold, and GJ. But guys, that's it from me. I appreciate all of you guys. It's time for me to go to sleep. And we'll see you guys tomorrow. Okay, just go with SST's schedule. We got London coming up very, very soon. Okay, and Wall Street tomorrow, PPI, post New York, 11 a.m. And then our Asian session with PK, and then myself again. We're going to do 9 to 11. We'll get into some more charts. We'll get into hopefully some trading if the volume is good. And that's everything, guys. So thank you guys. I appreciate all of you guys. If you guys can hit the like button as you're leaving, thank you guys. I appreciate all of your time. Thanks everyone on Zoom for joining in. I know it's very late for you guys as well. Thank you everyone on YouTube. I know it's late for you guys too, but we appreciate you guys. I'll see you guys tomorrow. God bless everyone. Hopefully you learned something new today. You know, just because we didn't look for a trade, that doesn't mean that nothing positive came out of the call. Hopefully something maybe you didn't know helped you. Okay, just take your time, patience, discipline. Let the trade come to you. Okay, that's what trading is. It's a platform that gives money to the patient from the impatient. Okay, so just be patient, be disciplined. Yes, sometimes we make impulsive decisions, but manage your risk accordingly when you're trading, and that will help go a long way. If you're over leveraging your account, you're over leveraging a lot of trades, you're going to stress out. You're going to panic when you're in a trade. Trade within your risk. Try not to risk more than 1% per day. Break it down into how many trades you want to take, and continue practicing with a demo account if you're new to trading, and we'll go from there, guys. So thank you guys. Appreciate all of you guys. Have a good day. If you guys want to join the Sniper team, www.stocksnipertrading.com. We'd love to have you in our Discord with the community and learn and earn with us. So thanks, guys. Have a good night, everyone. I hope you guys enjoyed this late night session. I'm got to go to sleep. I'm so tired. I will see you guys tomorrow. Thank you, guys. God bless. Have a good night. Appreciate everyone. Thank you. Have a good night, Cornelius. Val, take care. Daisy, Tony, take care, guys. Have a good night, everyone. Julian, take care, bro. Have a good night, everyone. Thank you, guys. You guys as well, and YouTube. Have a good night. 29 Stumps, Crypt, Yellow Vest, everyone. Thank you, guys. Appreciate you guys. Have a good night. Thank you.
Hey guys, good morning, welcome to another live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, you guys, 200 pips, please secure.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stock Sniper Trading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.